So over the last week, a couple of really important changes have happened that are impacting buyers and sellers as we know it. Of course, the news is telling us something a little bit different every single day, and that's been the topic of our conversation the last several weeks. What we want you to know is the truth, based on factual data that we're seeing in the market every single day. So the first thing that we're going to talk about is the decrease in interest rates that have happened just over the last week or so, and how does that affect you as a buyer? What are your options, and how can you effectively use that to craft an offer in your benefit? So let's break it down. As a buyer, you're looking at your interest rates to determine your monthly mortgage payment. Is it affordable for me to buy a house today? Is my mortgage payment going to be $3,000, $3,500, $4,000? I don't know, right? So we're going to talk to a mortgage lender first and foremost before we ever start searching for a house. That is the number one thing you need to do to get started, is go and talk to your mortgage professional, talk to a realtor such as myself, and get a list of the people that we recommend that are going to be the professionals that will help you make that move forward. So going back, what does a decrease in interest rates do for you? Of course, we keep hearing that they're high and that's bad and the sky is falling down and everything is just not what it needs to be. Well, that might be the case for some people if they've been priced out. But if you're a motivated buyer, you have good stable income, you have good credit, and you have money for a down payment, now could be the best possible time in the last several years to buy a house. So why is that? With interest rates so high, what is a decrease going to do for me? They're still high, right? Well, just in the last several months, certain aspects, components, strategies, and offers have come to light that are helping buyers win even with high interest rates. So let's say they were at 7% and they're down to 6%. Of course, we know interest rates are determined by the buyer and the lender, but mostly the buyer. Your down payment, your credit score, the property type. Are you an owner-occupant buyer or an investor buyer? Are you buying single family, duplex, triplex, quadplex, or multifamily, even larger? We don't know these things until you go through the process talking with a mortgage lender. So that is the first place that you need to start. So with lower rates, let's say they've dropped 1%, right, or about 1%. Now they're down from 7 to 6%. Well, that's still pretty high. But what we're also seeing in the market with the decline in prices is the increase in seller participation in closing costs. That means at the closing table, sellers are giving you, the buyer, cash at closing, which we call seller concessions or credits, to help you buy down the interest rate. I hear that a lot, buying down the interest rate, sellers paying points, a 2-1 buy down. What does it mean to you as a consumer? Well, let's break it down. So a seller and buyer have options to facilitate the transaction to help get you, the buyer, to the closing table. So the first option is buying down the interest rate. There's an option to permanently, for the life of the entire loan, buy down the interest rate 1/4%, 0.5%, 3/4, 1%, etc. That comes from you, the buyer, or from the seller giving that money at closing. Typically, it's going to be a smaller amount and a little bit more expensive than the options we're going to talk about here in a second. So again, rates are already 1% lower, but prices have still declined. So that means compared to a month ago, you're going to get 1% better rate at the same prices as another buyer in the market. But let's say that seller really needs to sell their house and they're considering a $50,000 price reduction. Well, they might be able to offer you, the buyer, 2 or 3 points buy down of the interest rate. That means you can put down 1, 2, or 3% of the purchase price, pay it to the lender to buy down the interest rate to get down another percent or more from your interest rate. That means going from 6 down to 5 or even lower. All right, so that's for the life of the loan. And remember, as rates do go down more and more over the next 1, 2, or 3 years, depending how long this lasts, that's an opportunity for you to refinance and drop off some of your loan payments. So, of course, when you're at 20% down, you can also take off PMI. Typically, $300-$400 of your payment is going to be that PMI mortgage insurance. So if you were to drop that off and you were also to get a lower interest rate in the future, just know that your payment is not going to forever be what you get it out on day one. All right, this is the long game on a 30-year loan we're talking about. So let's just think about some of the options. All right, so you have an option to buy down permanently the interest rate from, let's say, 6% down to 5. Now, another option that has to be paid by the seller in this case is something like a 3-2-1 or a 2-1 rate buy down. I've been seeing that a ton on Facebook, that mortgage lenders and realtors are talking about these 3-2-1 or 2-1 rate buy downs. Now, that's some industry jargon, just like a lot of things are, to make the realtor sound smart and the buyer sound stupid, so that they need a professional telling them what to do. Well, let's break it down. So a 2-1 buy down, for example, that 2, what does it mean? That 1, what does it mean? So the 2-1 buy down is buying down your interest rate. It is truly prepaying and only prepaying 2 years of interest. So if today's interest is 6%, the seller is going to pay the difference between 2% lower of today's rate and today's rate. So if it's 6 and 2% lower is 4, what are your payments at 4% and what are they at 6%? The seller is going to cover the difference in that price for 1 year. All right, so that's 2%. That could be a couple $100 a month times 12 months. That's going to add up quick, right? $4,000 to $6,000, maybe even more depending on your price point. The seller pays that. And then for year 2, it's 2-1, so 1% difference. If today's rates are 6%, then in year 2 of your mortgage, you're going to pay 5% because the seller will have prepaid the difference of that 1% between today's rates and the 1% lower. So for the first year, they're paying the difference of 2% and today's rate. And for the second year, they're paying the difference of 1% lower in today's rate. You're still qualifying at today's rate, but for year 1, you're paying 2% lower interest. For year 2, you're paying 1% lower for the interest rates quoted. And then beyond that, if you don't have the opportunity to refinance lower, you're going to be stuck paying that 6% interest rate for the next 28 years. So consider that as a short-term option compared to buying down the interest rate, let's say 1% for the life of the loan. All right, so now that we know there's options to buy them down permanently and there's temporary rate buy downs for that 1 or 2 or 3 year period, some lenders are offering a 3-2-1 buy down, which means let's say you're at 3% for year 1, 4% interest for year 2, 5% for year 3, and after year 3, you're still at 6% unless you choose to refinance. So that's the news. The first news, at least, is that interest rates have dropped about 1%. That means for you as a buyer, you have more purchasing power. You can choose to make that a lower payment. And on top of that, we have concessions, closing costs, credits, whatever you want to call them, money paid by the seller at closing for you to be able to buy a house at a lower interest rate. That means buy more house. That means cash flow more on an investment or a house hack, whatever you choose to do with it. Now, the second thing that we're going to talk about that's changed in our market is the increase in conventional lending limits. So those were just released by the federal government. Those come out, and that tells us that as an FHA buyer, as a conventional buyer, or a jumbo loan buyer, the limits that you can purchase a house with those loans has just increased. Let's say they were at 475 before, now they're at 500. What does that mean? All right, every county is going to be different. You need to look at what those limits are for you. Talk to a great local lender about that, and we can provide one if you need. So with the increase in those lending limits, that's important to you as a buyer, again, for the interest rate conversation. As you switch from one program to the next, the risk for that lender increases, and therefore so do the interest rates. That's what they're backing. So if you go from a conventional loan to a jumbo loan, per se, your rates are going to go up. If you can now still buy the more expensive house with a regular conventional loan, you might save 1% on your interest rate. That's really important with today's high interest rates because you can stay in the same bracket that you were before. Now only this week we're 1% lower, and you can still buy the house, and the prices are still lower, 15 to 20% in most areas of Colorado, and the sellers are willing to pay closing costs for most buyers. So that means you have so much more opportunity for lower prices, lower payments, and increased negotiation as a buyer in today's market. So if you've been on the fence, you're waiting for something to happen, you're waiting for a sign from above, now is the time. Get off the fence, go start taking some action, start researching what it takes to be a buyer, and talk to your local real estate professional about how to do that. We're here to help. And while every realtor is built a little bit differently with a different philosophy, different training, and a different mindset about buying and selling real estate, just know that our team here has your best interest in mind at all times, as it's supposed to be. We want you to win, to succeed, and to make the most money possible in your real estate investments. That is our absolute number one priority. What we try and do is always find properties that have some meat on the bone. Never once have we found a property that's equal or above asking price where there was an opportunity to purchase lower. Our buyers are finding deals. They're getting equity on day one, which means we're offering lower and negotiating better terms for our clients that fit their needs and fit their goals. If you want someone that's going to work really hard for you, pounding the pavement, finding off-market deals, finding lower priced properties for you to make money on day one, rather than offering above asking price like you saw a lot of people do over the last couple of years, give us a call, message us, comment below. Our entire team is trained on these strategies and here to help. Again, I'm Cody Walker with eXp Realty, serving the Colorado Front Range, located in Denver, but going all the way up to Fort Collins, down to Colorado Springs, and helping you win in real estate. Thanks again. We're here to help.